Welcome back to the channel, ladies and gentlemen. In this video, we're going to talk about some secrets to securing business credits and financing even as a startup. So you're going to learn about different types of financing, what you need to put on applications in order to get approved. We're going to talk about business credits as well as using personal credit to get financing and lines of credit and more. So if you're serious about getting business credit and financing for your company, for your business, even if you are a startup, make sure that you watch this entire video and also subscribe if you want to see more videos that talk about business credit, personal credit, as well as business grants and more. First, we're going to talk about the types of business financing. So the first type that we're going to talk about are credit lines. Most business owners want access to credit lines. They are also one of the hardest types of financing to qualify for. To get approved for real credit lines, you must supply business financials in almost all cases. Financials include your business tax returns for 2 to 3 years. You might also be asked for a profit and loss statement, both current and projected bank statements, business plans, and more. Your approval amount will be based on the profits you show on your returns. Your tax returns also should show that you have increasing profits. Your personal and business credit will be reviewed. And that's in most cases, not in all cases though. But both should be in good standing to get approved. Lenders like to see that you have open credit lines now with high limits or very high limits. Approval amounts might also be linked to your current existing limits. Okay, so now let's talk about loans. Business loans are available at a lot of places, including SBA loans offered by conventional banks. For example, Chase, Bank of America, Wells Fargo, those are conventional banks. Many lenders also provide business loans, and some other types of collateral-based financing also offer loans such as book of business financing for insurance agents. Many loans are shorter terms, usually 3 to 5 years. Others might go as long as 20 years or longer. Rates vary based on risk, with some being 2% over prime rate and others being as high as 35%. Now, to get a long-term loan, you will almost always need financials and in many cases, collateral. So now we're going to talk about advances. Merchant and revenue advances are becoming increasingly common in the business funding arena. These are just like cash advances in the consumer world. They are much easier to secure than loans and credit lines. A lot of times they also will require lower, or their personal credit score requirements are lower than a lot of other types of financing. And sometimes they don't even ask for personal credit. In most cases, you can get approved with no business financials being provided, including no tax returns. Advances usually close very fast, within a week. The terms aren't as favorable on advances, but the scope of who qualifies is very broad. Now let's talk about credit cards. So there are a few types of credit cards you can secure in the business funding world. Most of these credit cards work exactly as consumer credit cards do, but with additional benefits. The provided benefits depend on the type of cards you get. So the first type of business credit cards are no PG business credit cards, and that means no personal guarantee. That means you can get these credit cards solely based off of your business credit and other business factors like time in business, so on and so forth. You can get business credit cards for your business through Visa and MasterCard that you can use almost anywhere for almost any purpose. These cards are secured by you having good business credit. You usually need to have 10 accounts reporting and a paydex score of 80 or higher to be approved. These card limits will mimic your current highest business credit card account limits. Rates are like for the consumer credit cards. No personal guarantee from you is required. Now, there's also something called unsecured business credit cards with a PG. You can use your personal credit to get approved for real business credit cards instead of using your business credit. That is also optional if you have good personal credit. These accounts will require you to provide a personal guarantee. To get approved, you must have very good, nearly flawless personal credit with no more than 4 to 6 inquiries in the last 24 months and utilization below 40%. You can typically get 5 times more than you can get on your own, and these will come in separate credit cards. These credit cards usually only report to the business credit reporting agencies and offer intro rates of 0% for 6 to 18 months. Okay, so applying for business funding, the secrets of the application. So this is what you need to know in order to fill out these applications correctly so that you have a higher chance of getting approved. A lot of you fill out these applications incorrectly, and a lot of times that's the reason why you get denied for funding. Or you may have a business that is in a high-risk industry, or that business is on that particular lender's high-risk industry list, or you might have a high-risk industry word in your company name, or you may not have a actual business phone number, or your business phone number may not even be listed in the 411. So let's start off with the company name. If you are just choosing a name, try to choose a basic name. Make it as basic as possible so that you're not placed into one industry. For example, if you have the word credit in your business name, that's going to automatically place you in a high-risk industry. There are a lot of industries that fall on the restricted list. Your name can allude to an industry you may be in or may not even be in at all. And this can affect your ability to get approved. For example, the name Elite Credit was the cause of a bank account getting shut down. The name led the lender to believe it was a credit repair company, which was on their restricted list. Any other industry-specific name very well might restrict your ability to get money with some lending sources and credit issuers. So Elite Consulting would be better than Elite Credit, as a general consulting name does not keep anyone from extending credit or loans. The more generic the business name is, the better your chances of getting money actually is. So now let's talk about the phone number. You need a business phone. Do not use your personal home phone or your personal cell phone. That can get you denied on applications. They know if you're using a cell phone or if you're using a home phone number. So don't even try to apply for any type of credit or funding or loans without a real business phone. You can go to Ring Central, for example, or Grasshopper and get a business phone number. Voice over IP numbers are okay. You should have a toll-free number unless you deal with local businesses or you have a local business. Your number must be listed in the 411. So try listyourself.net for a 411 listing. Now, if you are a homeowner, did you know that being a homeowner increases your chances of being approved? It shows a greater level of maturity and responsibility. Plus, it shows you can manage a higher monthly payment. And your home might be even used as collateral for some financing, such as SBA loans. Now, when it comes to assets, lenders love assets because they love collateral. So when you are asked on an application about the assets you have, what the lender is really looking for is that you can use collateral for the debt just in case something happens. The more collateral you have, the better chances you have of being approved with many types of financing. SBA loans require the lender to take all assets you have in your business as collateral, and if it is still not enough, they will take your personal assets like your home. Some lenders, such as advanced lenders, don't need collateral. It still helps them feel more secure in lending you money if you do have assets to show. Many things can work as collateral, such as 401k and stocks, real estate, inventory and equipment, purchase orders and receivables, and other items that are easy for a lender to sell and get their money back in case of default. Now, time in business. The longer you are in business, the better your chances of getting approved for almost all types of funding are. This is because extensive statistics on this show that majority of businesses fail in early years, 3 years or less of being open. The longer a business is open, the more their chances of failing actually decline. So longer standing businesses have a much less risk of going out of business than newer businesses. Being open less than 1 year makes it tough to get financing, but it is possible. You can get unsecured personal and business cards with no issues, but advances are tougher and loans are nearly impossible to get. Some business credit vendors, stores, and cash credit sources also might not approve you if you have been open less than 1 year, or actually 1 year or less. That's some, not all. So don't get discouraged if you are a startup who has been open less than a year. 3 years or more is what most sources prefer. This is part of the reason the SBA loans require 2 to 3 years of financials. So average revenue. Having a good, stable revenue can be one of the main reasons you get approved for most funding products, such as merchant or revenue advances, which is actually one of the easiest types of funding to get. Just having consistent revenue alone can get you approved. But almost all sources require that you have revenue coming in for approval. Some sources like personal and business cards won't require verification. So when it comes to business credit cards and personal credit cards, a lot of times they don't really look at your financials. They really look at your business credit or your personal credit to get you approved, as well as time in business, so on and so forth. Other sources like lenders will verify your cash flow with your bank statements before they provide advances. Most lenders issuing loans and credit lines will require tax returns on top of profit and loss statements and bank statements to verify your income. Your tax returns must show good profits. The amount you show will determine the amount of money you are approved for. You must show increasing profits from year to year, not declining profits. Declining profits are a sign of trouble, and most lenders will run away from any deal where the applicant has revenues or profits declining from year to year. Okay, so let's talk about industries. So there are many high-risk industries that lenders do not prefer. The list of high-risk industries is different for each lender and funding type. Now, this is a big advantage of actually having our business finance suite, because you're able to know exactly what lenders require what. So we tell you all of the requirements for each lender, how to get approved, as well as all of the requirements to get approved for different credit cards, different lines of credit, different types of financing. So if you're interested in learning more about that, there is a link in the description for a free training that goes into more depth about business funding. So click the link in the description. Some lenders have been burned by one type of industry and blacklisted it, while other lenders offer similar products, are okay with that particular industry. So it varies from different lenders. Some lenders will accept people, for example, in the credit industry, and some will not. It's just going to depend on that particular lender. Some industries are almost always seen as high risk no matter what lender you apply through. Vices are almost always seen as high risk, such as gambling and the adult industry. Other industries, such as financial services, are restricted with many lending sources, but not all. Financial services can include credit repair, lenders, accountants, insurance agents, mortgage brokers, realtors, and anything else dealing with any type of financial transaction. Always ask up front if the lender views your industry as high risk. Now, when it comes to personal credit scores, so personal credit matters most of the time unless it is not being looked at. Now, there are a lot of different types of credit products that you can get for your business that do not require personal credit. You can buy things for your business like equipment, you can buy computers, you can buy printers, anything you can think of for your business using business credit that is not linked to your actual personal credit. And there also are some MasterCards available that you can get with just your business credit as well. Again, there is a link in the description to watch that free training that talks more about business credit and business funding and how to build business credit. So for example, when you're applying for business credit, you can use your EIN to get approved and leave your SSN off of the application. Now, again, that is only certain types of business credit accounts. You cannot do this for the majority of the big banks like Chase, Bank of America, Wells Fargo. They will ask you for your personal credit because they do kind of look at your personal credit more than your business credit, but a lot of times they will look at both your business credit and your personal credit. It's just going to all depend on what type of product you're applying for. And also if you have business credit established, it's a lot of different factors. But again, you have to watch the training, the free training that's in the description in order to get a better understanding on how that works. Now, all other types of funding actually will take a look at your personal credit. It will not be a hard, credit check all of the time. Sometimes they do soft pulls on your credit. And a lot of the time, again, for like merchant advances or revenue advances, the credit requirements are pretty low because they're mainly looking at your revenue. So I've seen some with credit requirements as low as like 580 and some as low as 600 FICO. So yes, you can get approved for cash flow financing and merchant advances with bad credit, but your repayment terms won't be nearly as favorable as those with good personal credit. So that's a given anyway. Even when you're doing stuff with your personal credit that's not related to business, if you have bad personal credit, your APRs and your interest rates are always going to be higher. So SBA loans, conventional loans, and most other long-term loans and credit lines do require good personal credit for approval in most cases. Now, I've talked about SBA loans. I did a video a couple of days ago about SBA loans. When it comes to SBA loans, they do look at your business credit too, as well as your personal credit. So building business credit, again, is still important. They both are important. Building personal credit and business credit is still important because a lot of lenders look at both and not just one or the other. So collateral and asset type-based funding or financing doesn't care about personal credit as much. And this is one of the exceptions. And this is because they're using your collateral to get you approved. So again, if you have 401ks, stocks, real estate, equipment that's worth money, you can get financing even if you have bad personal credit. Now, when it comes to business credit scores, there is no FCRA in the business world, so lenders will never disclose to you that they pulled your business credit when you apply for business financing, but they will pull your business credit. Like I said, a lot of these lenders look at both your business and your personal credit. Just think, you are applying for money for your business, and your business has its own credit profile and score. So of course, they will want to see how your business pays its bills on top of how you do as the owner. Not having established business credit makes you look like a rookie, a startup, a non-established business. This will lead to a denial. So ensure you have at least 5 to 10 reported accounts and that you are paying them as agreed. Now, again, sometimes this doesn't matter. This only really doesn't matter sometimes if you are a startup and you're going to personally guarantee a business credit card from like Chase, and you have really, really good personal credit with no derogatory items and hardly any inquiries. And also your utilization is low. But the thing about Chase is they don't report to the business credit bureaus. So it's not helping you build business credit. Now, bank credit. You have 3 types of bank credit. So you have personal credit, business credit, and bank credit. I meant to say you have 3 types of credit. So it's personal, business, and bank credit. All 3 should be good for the best chances of approval. Now, when it comes to bank credit, your bank rating is mostly based on the amount of money you keep in your bank account over the last 90 days. So to have a high 5 bank rating, your account balances have to be between $70,000 and $99,000. A mid 5, your balance needs to be between $40,000 and $69,999,000. A low 5, the balance needs to be between $10,000 and $39,000. High 4, $7,000 to $9,999. Mid 4, $4,000 to $600,999. Low 4 is $1,000 to $3,999. Okay, so funding approval time frames. So the higher the dollar amount loan or line you secure, the longer it will take to underwrite, no matter what type of financing you are applying for. Usually loans take 30 to 90 days or more. Credit lines usually take 30 to 90 days as well. Advances are very fast, usually within a week or less. Credit cards can take 3 weeks or less to secure. Okay, so the due diligence checks. All lenders will do a due diligence check on you and your application. They will check if you have other outstanding neglected to mention on your application. They will check to make sure your lease and your mortgage is in good standing. They will check if you are going out of business. They will even look at your online reputation. The purpose of this check is to find hidden risk that they couldn't find on the application. And other purposes are to see if you left information off of your application intentionally. So make sure you disclose everything you are asked to, otherwise lenders will find out about it. These checks usually take 1 to 3 days to complete. All right, so what types of financing should you apply for? So the available financing, there are a lot of different financing options available today. There are so many options that you can choose from, and you might not know where to start. So let's dive into some of the available options you have. What works best for you? So your bank. Most business owners try to apply at their bank first for financing, and this is a no-no because they're strict, first of all, and second of all, a lot of business owners don't even know what they need to have to actually, they don't know the requirements, and a lot of times the people at the bank don't even know. The approval requirements are usually hidden requirements that only the underwriting team really knows about. Now, you might be lucky to call the customer service line, for their loan department or their credit department and see if you can get a knowledgeable representative, but it's rare because a lot of times they don't know the requirements. But according to the Department of Revenue, only about 1% of all business funding comes from conventional banks, such as SBA loans. So most business owners actually do not get their financing from their bank. It's most always from alternative lenders. Your bank can help you with credit lines and loans, but you must have financials and good credit for approval. So you can Google the SBA approval checklist to find this page. This list is all that you need for conventional loan approvals. So alternative lending. Most business financing that happens today comes from alternative lenders, not the big banks. These lenders actually have carved out niches in the business funding world. They typically focus only on one aspect of your business to make a lending decision. If that one area of your business is strong, you can get approved even if you are weak in other areas. This is very different from SBA loans that look at the whole picture. Alternative lending is much easier to secure than conventional loans, and you can usually get approved and funded much faster also. The terms typically aren't as favorable as conventional financing, but you can often get approved when your bank would tell you no. Okay, so financing based on credit. We have discussed several funding types that are available based on credit. Some use your business credit for approval, others use personal credit for approval. You can't go into your bank and get multiple business or personal cards, but there are lenders who focus on this type of financing only and can get you multiple high limit cards that report to the business reporting agencies and have great incentives like low intro rates. Remember, you must have good personal credit or business credit to be approved, and even a startup can be approved. So financing based on collateral-based lenders are also called asset-based lenders. They can approve you for money even if you have bad credit, and in many cases, if you have just opened your business. The key is you need acceptable collateral to get approved. So financing based on collateral, when it comes to acceptable collateral, it includes, again, a 401k and stocks, inventory, equipment, real estate, also purchase orders and account receivables if from another business, and other viable types of business collateral. Vehicles are depreciating assets and typically won't qualify. Rates and terms on collateral-based funding are very good, sometimes better than conventional loans. It's not uncommon to get rates of 5% or less, even with bad credit. If you default, the lender just takes your collateral, so the risk isn't as high as with other types of business funding. Okay, so financing based on cash flow. Most advances are forms of cash flow based financing. This is the fastest and easiest money you can get your hands on. You can get approved with bad credit and no collateral, but you will need to show bank statements to prove that you have over $10,000 a month in deposits for at least 6 months. You can usually get as much as 12% of your annual revenue advanced to you. So for example, if you make $100,000 a year, you can get up to $12,000 as an advance. These are cash advances. The rates are not great, ranging from 8 to 35%, depending on risk. You will usually be approved for 6 to 18 months payback. Once you prove yourself with your first advance terms, you will usually get much better rates on future advances. Therefore, we find that over 70% of those who get their first advance come back and get more money ongoing. So, final thoughts. There's a lot of money available for business owners more now than ever. You just need to know what type of financing to go after. Once you know that, you can more easily find what you need. Make sure that you set up your business credibly before applying to have the best chances of getting approved. Also, we offer all types of financing and credit discussed in this video. So if you want to get more information on business funding, getting business credit for your business, as well as different types of funding options to start or grow your business, again, click the link in the description and sign up for that free training. It will go more in depth. Thank you for watching. Make sure that you like this video if you found this video valuable. Comment down below if you have any questions. Make sure that you also subscribe, hit the bell icon to receive notifications on when I release new videos, and I will see you in the next video.